Good morning, everybody. This is Steven with Cannin.com, and we're here to learn how to trade using both fundamentals and technicals. Hopefully, you've enjoyed the reading of this latest fundamental analysis on KushCo. And here we are to jump into the technicals. Kush, as you know, mainly in North America, they have 5 main facilities where they distribute packaging for the cannabis industry. They also have a gas producing line for a lot of the concentrate manufacturers. But let's see what their pricing chart is doing. Let's jump over now. So you can see KSHB is the ticker we're looking at on the OTC. KushCo Holdings, again using our Hakanashi. And this week we're using one old friend and one new indicator that I want to teach you, both based on price chart movements. So down below in the purple, you'll see the RSI, Relative Strength Index. This, as we know, reflects price changes. Everything above 70 is overbought, everything below 30 is oversold. So we get a quick measurement there. I've drawn an additional line here at 50 because I want to just show you what happens when the RSI crosses 50. But first, Donchian channels, DC, we haven't looked at these before. These are also calculated just based on pricing charts. Values. So the yellow line in the middle is the average of 20 periods, the average price over 20 periods. And then we have the upper line is the high price over the last 20 periods, and then the lower line is the low price over the last 20 periods. So totally price-based indicators today. Look what happens on the RSI. Let's just start looking when we cross 50. Every time we cross 50, we have a really recent cross on the DC, which is what you would expect because they're both mathematically based on the pricing chart movements. So let's just start to analyze. We have a downward cross here, and at the exact same time on the RSI we have a cross. This downward trend continues, and then bam, pricing increases and does another cross. Our RSI crosses 50 again. So as soon as you start to see the RSI come back and start to creep towards 50, if you're in a trade that's going the opposite direction, use that as a signal to get out of that trade. The pricing chart is probably going to tell you the same story, but sometimes it's a little hard to interpret here. There's horizontal movement here, all while the RSI is actually gaining in value. So use that as kind of the second gun to get out of a losing trade. If we analyze it again here, we have a nice cross. And then we travel into oversold conditions. That makes sense because the price chart is moving down, 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 down. All of a sudden, we have a big increase from 38 to 50 there, and it happens over 4 candles, and the price almost doesn't change at all in those 4 candles. So it's a little easier to see sometimes in the RSI. The other useful trick is to take your profit. Here we have a cross. The RSI creeps up to about 63, and then we have a slope change. It stops its increasing and actually decreases the next candle down to 62. If you use that slope change as a point to just take your profit and get out right on that next channel as soon as the RSI has a slope change, you would have taken a lot of profit and missed this horizontal movement. Yes, you would have missed a little bit more of gains, but 40 cents gain there is pretty nice. Alternatively, you can do the same thing. Here's where it crossed. We would have ridden that for 3, and then bam, we get our slope change. So had we gotten out of the trade today, we would have missed a little bit of the downward trend, but we would have been able to capture 36 cents of profit. So it's a pretty rudimentary technique, but use the RSI both as secondary validation to get out of bad trades and to take a little bit of profit. It's a pretty easy analysis. So thanks for sticking around with us. Thanks for learning with us, and check out Cannin.com for much more.